Okay, it's a quick video on the purchase ledger control account, sometimes known as the trade payables ledger control account as well. So the purchase ledger control account is there to work out the trade payables figure that is in the statement of financial position. So the key thing we know about a trade payable is it is a liability. It goes in the current liability of the statement of financial position. So we know therefore it increases on the credit side. So when we're looking at these entries at the bottom, what we're reviewing is whether they would increase or decrease the control account. So obviously the balance brought down, it means we owe money from the previous period. So that would go up on the credit side. So we're going to have a balance brought down on the credit. Any interest we're charged by trade payables, so again, that increases the amount we owe them because we've been too slow in paying them. That would go on the credit side. Purchase returns, could be purchase returns, could be returns outwards. It can decrease how much we owe because we've returned goods. So that will go on the debit. Contra entry, so this is where we owe money to a supplier but they owe money to us, so we just cancel it out. There's no money changing hands, so it reduces the amount we owe them, so that's going to go on the debit side. Credit purchases, which remember it's not going to be cash purchases, it's only things we bought on credit. So credit purchases increases the amount we owe, so that goes on the credit side. Discounts received, so we receive a discount for paying them quickly, so we don't have to pay as much, so that's going to go on the debit side of the control account because it reduces the amount we owe. So the discounts they've allowed us, as with the payments, we paid off some of our debt, so therefore that's going to go on to the debit side. What we need to do is look at a question, which we're going to go on the next slide. So this question is from AS May 2020, question 13.2. So a 5 marker on purchase ledger control accounts. I said before in the sales ledger control account video, 3.4 has not been covered heavily. So some of this will be quite useful to review just in case it comes up on an A2 paper. So we've got to isolate of these transactions which are purchase ledger, which are sales ledger, and where they would go or if they would go into the control account. Some of them could be alien items. The first one being one of these. Cash purchases will not go in the purchase ledger control account because that is paid for. They are paid for instantly, so they're not a credit transaction, not included. Cash sales, when it's a sale, automatically irrelevant. Discounts allowed, that's for sales ledger, that's when we're paying. Discounts received, however, would go on the debit. Payments to credit suppliers would go on the debits, reducing the amount we owe. Receipts from credit customers, sales ledger not relevant. Return check from a customer, sales ledger not relevant. Purchase journal, yep, so that's going to go on the credit, the amount we bought. Sales journal, sales ledger control not relevant. This one's awkward. So we've overpaid a supplier, so we've got a debit balance of £180. Now that's unusual because obviously it's a liability normally. We're going to have to be very careful and separately record that £180 in the control account to make sure that we've got a record and we claim that back and make sure we don't pay them too much again in the future, so we can clear it down to zero. The provision for doubtful debts is relevant to the sales ledger and wouldn't go in any control account anyway. Let's look at the mark scheme. So what we've got here, the bank figure on the debit, 5,800, alongside, sorry, my highlighter's gone a bit wobbly there, alongside the discounts received of 125. So both of us on debit, 1 mark for each, which is nice. 1 mark for the purchases. On the credit, as we said, now the 180, like I said, we're going to separately record that 180. So we know we've got a record that we've overpaid them. The carried down and brought down have to be shown, as it says here on the mark scheme next to that hash. Am I highlighting? Make sure your highlighting is better on the exams, ladies and gentlemen, is there. And then finally, the own figure for balancing the purchase ledger control to 19,255. So when we're preparing the accounts, we would take off the 180 on the debit. But for this purpose, like I said, for that 180, because it's an overpayment, we want to separately record it so we've got a record of it. Own figure again on the trade payables, but if you had cash purchases or sales ledger items, you can't get that. But obviously, if you dealt with the 180 not completely correctly, you could still be okay. What it doesn't sound the mark scheme is if you'd taken the 180 and dealt with it in a different way, just to get that net balance brought down. Taking that into account, even though this is an old AS paper, I would deal with it in this way. It makes sense. You would have a record of the debit balance, which is an unusual thing to happen, but businesses can overpay. Just the same as in the sales ledger, you could have a credit balance where a customer has overpaid you, because obviously it's got to go both ways. So anyway, make sure you know your control accounts important and could well come up and help you in incomplete records as well.